Welcome. We will consider Brexit today and start with cable and euro US dollar. So let's first turn to the longer term chart of cable or GBP US dollar. It is still in a downtrend, a bear trend, and the potential down on our impulsive targets is not achieved yet. We would still have some potential over the next few quarters, possibly below current levels. You can see the upper boundary of these targets is around 141, possibly down to the low 130s or 131.60. Now turning to the perspective over the next few months, we look at this daily chart, which is also still in a bear trend and possibly could still extend over the next few months into our impulsive targets. We have reached the upper end of these targets, but yet we could move down towards 138. We are quite oversold, but our envelopes are still heading lower, so we think we could achieve that potential. On the hourly chart, or the perspective over the next few weeks, we are still heading lower, and we could see that we could also reach below 140 down to 138. We're not yet oversold, and so we have some leeway to move lower. If we look at the summary, we have three bears, or potential continuous downtrend, and we could see a bit more potential on all three frequencies. Turning to euro dollar, on the longer term weekly chart, we can see that we are still in a downtrend and that the potential extends over the next few quarters. Possibly back below 107 on the upper boundary of our impulsive targets, and it could also go lower down to parity and even to 0.966. The daily chart has seen a very strong correction up. It actually came up into our gray corrective target zone, but never made it above it. It actually is now considering that this correction up may be over. The hourly chart seems to confirm that. It has moved below its corrective targets and is now in an impulsive down move. Over the next few weeks, it could reach back below 109 into the 108 level and possibly down to 107. There's still some leeway as the risk index is not oversold. The summary, still in a downtrend over the long term, a correction up which seems to be over on the daily and should remain so as long as we don't make it above these corrective targets or slightly above 113, and a resumed downtrend on the hourly chart with the possibility to move back below 110, possibly below 19. Potential resumed downtrend in what was a pullback period. Looking at a dollar yen is still correcting down. It is entering these corrective targets, but there's still some space to move a bit lower. Looking at the daily chart or the perspective over the next few months, we still see some risk here. Possibly we have reached the upper end of these targets, but possibly into the 110, higher 109 levels. We are already oversold, yet the envelopes are still heading down, so there's still some leeway to the downside or some risk to the downside. The hourly chart has attempted a correction up. It has been fairly weak. It hasn't been able to make it above its corrective target, so it's not a strong move yet and could yet resume its downtrend. It's also not yet oversold, so there is some leeway to the downside. To summarize it, two bears and a bull, an intermediate bottom, and quite a weak reaction in what still seems to be a downtrend over the weekly and the daily charts. Gold, still a very long-term downtrend, but we have reached our targets. We've seen a very strong reaction since the beginning of the year. It's possibly a first reaction. It's going to be important to see if this breakout can be confirmed. We could see that our envelopes are touching each other and that we are oversold, so it could be the right moment for a trend reversal. But yet, we cannot confirm it yet over the long term. The reaction up has been very, very strong. We've made it above our corrective targets around 1160 and are now eyeing impulsive targets towards 1256, possibly into the lower 1300s. Our risk index is not overbought yet, so this move is advancing and doesn't have a strong risk situation. We are probably coming into a first test. We've seen a consolidation since the last 10 days. We are in a correction down. If we manage to hold above these corrective targets, we could yet resume the uptrend in the move up that we've seen on the daily. But yet, these are the levels to watch around 1190. So we need to hold above 1190 to confirm the continuation of the uptrend. So as we can see, an exhausted down move, but which hasn't been proven to be a reversal yet on the long-term chart. A strong move up on the daily and a first test here around 1190, which is going to come over the next few days. Finally, on markets, on the S&P 500, we can see that we are on a correction down. We haven't quite reached the targets yet, so we can't call the all clear yet. And we could still work our way down to this gray target zone over the next few quarters. The daily is also still at risk. We could still see some potential down below 1800, possibly down to the lower 1700s. We are oversold and hence the reaction, but the reaction would really need to make it above the strong support resistance levels that we've seen around 2000 over the last few months. On the hourly, we're moving up quite aggressively. We're not yet oversold, and we could possibly see 1975 up to the 2000 level to test this strong resistance. So at the moment, still a bear over the long term and the medium term, and a bull over the short term. It's an intermediate bottom for now, and the crucial levels will be around the 2000 level, support and resistance. Thank you very much. Bye-bye.